Hi believers, this is Amit from Waya team, and I'm here to provide a weekly bite and the road ahead in the markets. The Indian stock market recently experienced its strongest weekly rally in 4 years, fueled by a reversal in foreign investor outflows and optimism over potential progress in US India trade talks regarding mutual tariffs. The equity benchmark Nifty 50 rose 4.5% for the week. The broader indices kept pace with the Nifty, each climbing over 4%, underscoring the widespread strength of the rally. The market rally was mainly driven by optimism over the postponement of tariffs and newly announced exemption on certain products, sparking hopes for possible negotiation that might ease the strain on the global trade. All key sectors contributed to the market's upward momentum, with banking and financial stocks leading the gains. Other sectors also recorded solid performances. On banking sector, specifically ICICI Bank and HDFC Bank reported 18% and 7% growth in profits year on year, along with maintaining stable asset qualities. This has led to relative outperformance of the banking index, with Bank Nifty on the verge of hitting all-time high. With this recovery, India has emerged as the first major market to fully recover from the losses triggered by the US tariff announcement earlier this month. Investor sentiment was buoyed by expectation that the US China trade dispute may not harm but rather benefit India. Also, good progress is made in the ongoing India US trade deal. India and the US has been negotiating a bilateral trade agreement since March 2025. They aim to complete the first phase of the deal by this September and hope to more than double the current bilateral trade from around USD 191 billion to USD 500 billion by 2030. Technically, Nifty has been trading within a broad range of 21,700 to 23,900 over the past 2 months and has now reached the upper end of the band. Moreover, it has reclaimed all the key moving averages, that is, 100 and 200-day moving averages. Going forward, the prevailing positive momentum is expected to continue with a potential upside towards 24,200 to 24,800 zone. In case of a dip, the 23,000 to 23,200 zone is likely to act as a major support. Adding to it, a sharp decline in the volatility index, India VIX, also signals a reduction in the market fear after recent choppiness. While it's irrational to label this as a start of the new bull market, it's equally irrational to continue hoping for a breakdown and a new low. All signals in market are increasingly pointing towards a consolidation and being range-driven trading environment. We believe a buy on dips approach until Nifty breaches the 23,000 mark. Sector-wise, rate-sensitive segments such as banking, financials, and auto continue to be preferred. Participation from the broader market is also visible. However, focus should be only on fundamentally sound stocks, especially with the earnings season underway. As of 20th April 2025, 58 companies have declared results, with only a handful reporting a good set of earnings. It's likely that the earning performance will keep narrowing as we further progress into the earnings season, as many companies can report subdued results on the back of slowdown seen in the economy and demand hurt by global trade war as well. Nonetheless, the durability of the upward trend will significantly depend on the forthcoming Q4 earnings season. These outcomes will be crucial in determining the direction of the market, as investors and market participants will closely scrutinize corporate performance and forward guidance. If earnings fall short of expectation, it could negatively impact current market sentiments and reverse recent gains. Although, if the forward guidance is great, the stock price won't get impacted that much. On the global macro front, 2 years range breakdown in US dollar index coupled with cool off in Brent crude oil prices augurs well for the pullback in emerging markets. Concluding, the domestic macroeconomic environment remains supportive, encouraging investors to buy on dips in selected names. The inflation outlook appears favorable, reinforced by forecast of an above normal monsoon and a decline in oil prices. On Waya's front, happy to share our PMS is ranked ninth among mid-cap and small-cap PMS across the country. We are doing well, and if you have 50 lakhs to keep aside for long-term multi-fold returns, please contact us at support@thewire.com, and my team will help you to understand the pros and cons. This is the time to come out of your cocoon and invest. That's all for today. Wishing you a profitable trading week ahead. Thank you.